Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Bitcoin, taking a look at the most recent price action and what I think is likely to happen next. Now as I get into today's video, if you do find it useful and informative, smash that like button. I really do appreciate that. If you're watching this on YouTube and you're not yet subscribed, what are you waiting for? Go ahead and subscribe. You can always unsubscribe later. If you're watching it on X, then why not give us a follow and give us a repost? Really do appreciate those things. Really help spread the content to more like-minded individuals. Let's go ahead and jump right down into today's video for Bitcoin. We're going to kick things off with the 1 hour time frame and just going to review where we currently sit with this one. So we're basically still stuck in our little ranging market here on BTC, and you can see that we're still being suppressed by our 50 EMA, and you can see we've coiled up really tight now. Okay, and the chances are we're going to see a big break here. Okay, we might break up temporarily before we continue this move to the downside, but essentially what I'm looking for here is a breakdown. Okay, that hasn't changed. We can see that our target is at the moment set between 23,287 to 24,113. Currently really struggling on that 50 EMA, and it has put us into an overbought area on our 8 hour and 4 hour timeframes, with our hourly actually hovering a little bit on the low side. This allows us to see that little break upwards before going down. So do not. So I kind of do expect a quick move up, liquidate anyone who is shorting, and then a drop to the downside. Okay, that's kind of how I envision this one going. And it will be a triangle in my opinion, an A, B, C, D, E, and the E is unpredictable. It can break out of the triangle before we drop on down. Okay, getting the E wave for this next move to the downside is going to be quite key. I would say that there's the potential for a big move to the upside, but I don't think that's going to be the case, but we'll show the potential nonetheless. We could see this potentially coming up to 28K. Before coming down. I don't think that'll happen, but it's always a possibility, so we should always note it. Essentially here, our 200 EMAs at 27,152. That could be where we get rejection. The move to the downside should be impulsive when it comes. This will be a 5-wave count, can be diagonal in its nature, of course, but for the most part, we're looking for this move here to kind of complete. Okay. This will actually be a part of a wave 3 position. Okay, so although we're talking about it being a wave 5, that's a 5-wave count inside of a wave 3, which brings us on to the daily time frame, because the daily time frame we're talking about is this wave 3 position. Okay, we'll see another bounce to the upside afterwards, and then a final drop down into the target range between 22,659 and 23,426. So you can see here that the idea is that we have these impulsive trend-based structures to the downside. We are on the daily time frame below the 50 EMA and below the 200 EMA, so we're in bearish territory there. If I throw on smart money concepts, you can see this is a previous area of kind of demand, also not an area that's holding out very well for us as well. So we need to be very aware that this is not a strong position for Bitcoin, and that 50 EMA is coming down quite sharply, and it will cross that 200 EMA shortly. Okay, so we expect to see further downside on the hourly chart, and we expect to see further downside on the daily chart, but you do not move in straight lines. For example, you can see there will be a wave 4. This will be a significant bounce upwards before we go down into another wave 5 positioning. Okay, and so for the most part, it's going to take some time. It's not going to be instantaneous. A lot of people are thinking, the worst's over. We've kind of cooled off a little bit, but all we've done is a continuation pattern, and we're going to pull down even further, in my opinion. Now, the daily and weekly charts are in okay positions. I'm not too concerned about these at the moment. So we can see that when a little move to the downside on the smaller time frames will put us into a nice low point on Bitcoin here for our daily. This will allow us to then push that stochastic RSI back up into the wave 4 before going back down into the wave 5. The weekly will probably remain in the oversold area. Okay, and so we'll see a bigger move to the upside, probably revisiting the idea of about 29K once you complete these structures, which is more part of the weekly time frame. At the moment, we find support on the 200 EMA from a weekly standpoint. We'll lose this, in my opinion, briefly, coming down a little bit deeper, and then rally back up in towards our resistances, which at the moment are coming in right here between 28,600 and 32,200. 200. Our swing high must hold. We cannot lose that because once we complete a 5-wave pattern, essentially that tells us that we start with 5, we must end in 5. And so at the moment, we'll just be looking for coming up into the resistances and then pushing all the way back down once again. So again, we'll come on down deeper at a later date. Now, essentially, my estimated targeted ranges are actually significantly lower than what we see at the moment. I think ultimately we'll be targeting out $20,000 as a CME gap there. But I do believe a new CME gap was created. Let's go ahead and bring this up here for a second. Yeah, a new CME gap was created here. We'll fill this out really quickly. This is one that we'll get on the bounce. I'm not concerned about this. We'll probably get this one before we get the 20K. But you can see here how this one gap was created. Okay, now essentially we have the gap up here at the 34.35. We have the gap here at 27 to 27.4, and then we have one down here, okay, at the 20 to 21. Okay, so essentially that is kind of what we're looking at there on that front. Let me bring this back up here for a second. Okay, and so we have those gaps to kind of fill out. Essentially, the small gap that was just left behind, this will get easily filled out very soon. I'm not too concerned about that. The two that we see here are the ones that are of equal distance apart. Those gaps are the ones that I am more concerned with. I suspect that because of our structure now looking and mimicking 5 waves, we have to move down to 20, and we'll have to do the 34, 35 later. There is, of course, one really bearish situation with a CME gap down here at 9,665 to 9,925. This is a gap that was left behind in 2020. So, we can be really bearish and think about that if we want to, but for the most part, we are where we are with this, and we're going to have to just keep on following where things are going, okay, over a period of time. So for now, that's kind of where Bitcoin sits on that weekly time frame. I suspect we will be gradually working our way down to 20 to 21. We'll fill out that little CME gap that's already been left behind here at 27K. That one will be filled out on a bounce as we work our way down towards 20K. Let's go up into the world of data. So here we have our membership website, membership.𝗕𝗘𝗪𝗏.io. Here we do have many different perks for different types of memberships, and each one of those has a 7-day free trial. You can check this out at your leisure, linked in the description down below. We are going to focus in on just one perk today, which is the data zone for Bitcoin. Right, we have the Bitcoin data right here. If I come on over to it, and I actually come back to the overview because I'm going to get into the wallet stuff in a moment. The overview shows us issuance in the last 24 hours, the inflation rate yearly, all the way through to the all-time high, number of days since all-time high, all those kind of good metrics. Nothing worth noting here out of the ordinary. We do have 19,464,393 BTC in circulating supply. That's a pretty meaty number, and the issuance is only 1.64% yearly. Halving it from 1.64% is going to be a minor impact on the circulating supply, meaning that the halving event has less impact overall. And as time progresses, they have less and less impact. Okay, it's more important to know what's circulating right now rather than what new Bitcoin's going to, come on into the ecosystem. It's a small amount at the moment, 1.64% yearly. Halving that is going to make it even smaller, but it's not going to have an impact on the supply-demand metrics because there's already 19,464,393 BTC in circulating supply. It's more important to think about the supply-demand metrics on what's currently out there, and seeing and less kind of being minted is fine, but at the moment it's not causing a huge problem as it is to the supply-demand metrics, and I don't think halving it is going to have much of an impact either. Understanding the logic that flows into that will help you understand whether or not you're going to have Litecoin situation with a Bitcoin halving event. Going over into liquidation, so we'll probably talk about this in a slightly different light in a moment, but just top level, $13 million or $13.8 million of liquidations on Bitcoin. 71% were long positions that got liquidated, and 28.9% were short positions that were liquidated. OKX was the exchange with the most amount of liquidations at 5.76 million. Bitcoin wallets then. Okay, so here, this particular data tracks how many wallets there are with a specific amount of Bitcoin. Okay, so we have over 1 Bitcoin, over 10 Bitcoin, over 100 Bitcoin, over 1,000, over 10,000, over 100,000, over 1 million. And there's also some low levels over 0.001, over 0.01, and over 0.1, right? And there's 10 different wallet sizes, and they're inclusive, essentially meaning that over 1 Bitcoin will include the the over 10,000 and over 100,000 Bitcoin, right? This allows us to take a look at a curved line, and anyone who drops down lower than these numbers, basically that allows us to see a drop in the line, the black line being the number of wallets, the orange line being the price action of Bitcoin. Now, why do I bring this up? I bring this up because there's this in the news. Basically, a mysterious Bitcoin wallet becomes the third largest Bitcoin holder in just 3 months. An unknown wallet has accrued more than $3 billion worth of Bitcoin in the last 3 months, sparking a wave of theories about its potential owner. Obviously, everyone loves to speculate, and so your question becomes, who's owning it? And obviously, people are speculating that it's going to be BlackRock, because BlackRock's spot ETF, right? They've been buying and accumulating. And they might be right about that. It could be BlackRock. And we have to understand that if their ETF does not get approved, who's going to be the first person to know, or first people to know, that that's not going to be approved? Do you think they're going to dump that Bitcoin on the market should their ETF not get approved? And is it insider trading if they're buying up all that Bitcoin in anticipation of the ETF? I don't know, but it's an interesting one if it is BlackRock, and it would make me very, very nervous if it were BlackRock. So coming into our data, well, we can check these things, right? We can say, okay, well, is it a brand new wallet that's just cropped out of nowhere with 100,000 Bitcoin or more, right? Because this particular wallet in question, I think, is 116,000 BTC. I'm sure that's what I read. 118,000 BTC, right? Worth $3.8 billion. So 100,000 BTC or more. There are 4 wallets, and over the last 7 days, it has not moved. In the last 30 days, it has not moved. In the last 90 days, the last 3 months, it has in fact gone up by 1 wallet. In the last 180 days, it has no change, which means essentially 180 days ago, there were 4 wallets that had 100,000 BTC or more. So it dropped down and then went back up again, which is interesting. So if we take a look at that, we'll dive into the line graph in a moment. In the last 365 days, there were 5 wallets, and now there's 4, so we're 20% down in a year. And so the question becomes, is it really BlackRock, which would be interesting if it is, or is it actually just that some wallets here were jumping around, moving around a little bit? Maybe. I mean, they're just looking at a very small window just 3 months ago. They're not looking at a year ago when there was actually 5 wallets and now there's only 4 wallets. And whereas 90 days ago, there were only 3 wallets, meaning that actually we had lost 2 wallets that had over 100,000 Bitcoin, and it just went up an additional 1. So ultimately, we're still down 20% than where we were a year ago. So it's an interesting one to kind of keep an eye on, but it is what it is. We can also note that actually we had 6 of these wallets back in March of 2019. We saw them aggressively selling as the market moved up, and it went down to as low as 1 wallet, okay, as we went into late 2020. We know that during the latter part of 2020, things were not looking that as strong. And of course, as we kind of go into November and into December, these wallets start to accumulate again, but happens to drop down right into kind of the lows of July. Coincidence? Maybe not. And then it rallies back up again and then starts to drop off. So the wallets here in question here are quite interesting. There's definitely a long-term play. They're not really following the price action as such. But you can see big movements in these wallets, essentially looking to accumulate at lows, as you can kind of see over here in late 2018, they were accumulating. And then as price starts to move up, they were basically selling aggressively. They made a lot of money, but it's not that they were selling at the tops of these markets. They were accumulating liquidity and selling into the liquidity. So it's quite interesting. I don't think they're after big, massive gains, but gains nonetheless. If they get, a 3x on their position, it's very, very sizable return on investment, right? And so we have to kind of consider that maybe something else is occurring in here. Is it BlackRock? Possibly. It could just be a brand new wallet, in which case we have to also argue that a brand new wallet's cropped up. We've also lost 2 existing wallets that had over 100,000 BTC. So it's going to be interesting. We know that within this kind of category, we have MicroStrategy, potentially now BlackRock, and so forth. So it's interesting. From other angles, such as the standard whale of 1,000 Bitcoin or more, we can see that they're not backing the Bitcoin move. Black line's going down. Essentially, this is the wallet counts. Over the last year, it's down 6.56%. And so, yeah, we're currently hovering on 2010 wallets, which is the lowest it has been for quite some time. I saw the low at 2007 wallets. That happened to be back in March of 2023. That was where the lows were coming in on the wallet count side for 1,000 Bitcoin or more. And so for the most part, we are testing those existing lows and potentially going down lower than they were previously. We've seen aggressive selling from these wallets, and I do not think that's going to ease anytime soon. So interesting on that news front. Now, that brings us over into Bitcoin price could face a further 22% drop, revisiting the 2017 highs. So Bitcoin has been predicted to trade as low as 20K, which is a pretty obvious area. There's a CME gap. It's approximately another 22% fall from its current pricing. And yeah, so it is what it is, right? There's lots of speculation around SpaceX. Obviously, SpaceX did sell their Bitcoin earlier in the year, Q2. It wasn't the catalyst of this move to the downside, but they did sell. And obviously, they're not backing it. And this is pretty much a standard institutional level investment perspective. The markets are not as good as what people want them to be, right? It's not to say that we don't want things to be bullish, because we sure do. But let's be truthful about it. It really is not a bullish market. There's not enough demand, anywhere near enough demand to have that definition. The very definition of a bull market is when demand outpaces supply. And we don't have that. So we know it's not a bull market. We have no trend-based structure to the upside, which brings me to this piece, which is a crypto analyst that says, or issuing a Bitcoin alert, warns that Bitcoin now at risk of reversing its 2023 uptrend. There wasn't really a trend there. It was a corrective, what I would call a bear market rally to the upside. This is something that we've been very vocal about pretty much this entire year. We were expecting a bear market rally. We did not want to see it push as high as it did, but it did push very aggressively high, and it tricked a lot of retail investors into FOMOing in, specifically above 30K area, where it just consolidated, where whales were basically suppressing the price, and well, we are where we are now. Essentially, I still suspect further downside. We're looking for 20K. It's possible that Bitcoin has bottomed. At the same time, though, it doesn't take much to really kind of push this one down a little bit deeper, and so we have to be very, very cautious. We can't just go in, full guns blazing, thinking that things are going to the moon. Doesn't quite work in that same way, right? You can't just draw a trend line and think that things are going upwards. You can't just copy some bars or some candlesticks from last year, put them to this year and say, look, this is what's going to happen, right? These are all very simplistic, non-analytical approaches to trading. There's a few more in-depth ways of approaching market analysis, in my opinion. So as I mentioned earlier, exchanges are a thing of interest, right? So we have liquidations here on exchanges, right? OKX was the largest at $5.7 million, right? Binance at the second largest at 3.8, 𝗕𝗘𝗪 at 1.8 million, and Bybit at 1.5 million. Okay. Now, when it comes to exchanges, it's a really good strategy to make sure that you are registered on as many of these exchanges as you possibly can. This sets you up for success in the future. You do not know which exchanges are going to survive a bear market, and we do not necessarily know which ones are going to have the best infrastructure that they remain online when there's millions of people trying to log on, trying to sell their cryptocurrency assets in the bull market. So the best strategy that I found over the years is to essentially make sure that I'm registered on as many different cryptocurrency exchanges as I possibly can. By doing this, registering, by using the platforms and understanding how to deposit fiat, how to withdraw fiat, how to deposit crypto, how do I withdraw crypto, do I need to link a bank account, do I need to do KYC, all these things allow you to get familiar with the platform, understand how they work, understand the timeframes in which it takes to deposit, withdraw, and sets yourself up for success in the future. If your favorite cryptocurrency exchange is down for whatever reason during the moment in time when you need to sell, you can try a backup. So maybe your backup is down. You have a backup of your backup, and maybe even a backup of your backup of your backup. This is a good strategy. This allows you to make sure that you're on the right end of the bull market. You don't want to end up on the back foot trying to set up a new exchange, having to scramble around trying to do KYC. Maybe there's a delay with that because there's so many other people also trying to do that at the same time. Ultimately, there's many different exchanges out there. At the moment, BitGet is my go-to platform. I do 100% of my leverage trading on BitGet and 90 to 95% of my spot trading on BitGet. Now, if there is an affiliate link in the description down below for BitGet, and if you do use that link, you are eligible for up to $8,000 of rewards, depending on how much deposit and trade on the platform. There are other links in the description down below as well, such as Bybit and Binance and so forth. Now, by no stretch of the imagination is BitGet my only exchange that I'm using. It's not. I have access to Binance, KuCoin, Gate.io, Crypto.com, Coinbase, Bybit, and so many others. And it's great and important that we have access to as many of these as possible, and as it sets us up for success in the future. So if you haven't yet signed up to these, why not check them out? Links are in the description down below. So do yourself a solid favor, get registered, get familiar with the platform, understand how to deposit, how to withdraw, how to trade, all those kind of things, and it really will help you set yourself up for success in the future. Now, just bear in mind that there are many different approaches to this. And there are lots of risks associated with trading on these platforms as well. So just understand the risks as you kind of get involved in them, and why not practice with some paper trading as well if that's something that's of interest to you. Let's go ahead and move on into the trading elements. So as I kind of say kind of daily here, there's plenty of trading opportunities out there should you look for them. Now, I think we have a good opportunity here for Bitcoin short. We are looking for a move from the current price action. So if we just take market value right now down here, we are talking about a move of about 7.5%. With leverage, that's very, very tidy. I think we're going to rally on up though. We're going to break up a little bit higher here, right, before we can short the market. So I suspect that we are going to get a better entry. Okay, so on that note, if I was to short this market, what would I be doing? I would be probably targeting out a little ways higher. I wouldn't be getting perfect entry because I'd have to monitor the chart entirely, but we might be able to get in at around the 26,600. The stop loss would have to be set above the 200 EMA for now. It's possible that we give this a wider berth though. We'll see what the risk reward comes out as. Take profit would be down here at the 24,111. I would probably lift that stop loss up a little ways, and to give me a little bit of breathing room. We'll have to see how the structures are going. In an ideal world, we want this nice and tight so we have minimal risk exposure. But at the same time, I think there's going to be a liquidation event on short positions. So we'd probably have to track this move up, see where it's kind of heading. But at the moment, I'd say the 200 EMA is the likely resistance. But if we wick above there, it's going to have to give us a bit more room on the stop loss side of things. I'd probably be waiting to see how this move occurs, but there's a short opportunity here nonetheless. With the percentage move that Bitcoin's looking for here, I would say that low leverage is kind of be your best friend. We wouldn't want to kind of over leverage ourselves and do something crazy like 100x degen kind of moves. That's not really going to do you justice in my opinion. I think somewhere between 5 and 10x is more than enough leverage for a move like this. Now, obviously, I'm not a financial advisor. I cannot give you financial advice. All I can do is give you my thoughts and opinions on the data in the charts as I personally see it. If you do have access to a financial advisor, you should probably consult them. I'm just a guy on YouTube at the end of the day, giving you my thoughts and opinions on the market. So do with this information as you will and as you see fit, but essentially I'm not a financial advisor. I give no financial advice. All I tell you is kind of what I think is going to happen here and how I would approach things. I think that's going to wrap up today's video on Bitcoin. If you have found it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Until the next one though, guys, have a fantastic day.